Redeemed, rehabilitated, and real entertaining. This is the Carl Jackson Podcast.
All right, welcome to Tuesday's edition of the Carl Jackson Show podcast. We got a great show for you lined up today. Bert of the Certified Financial Group is going to be joining us to talk about the SVB collapse, as well as others. What's in store for you? What should you be concerned about? Questions that you may want or need answered. We're going to dive into all of that. But first, before we do, I do want to make sure that I ask you to please subscribe to our podcast wherever you go to get your podcast. You can also find us on YouTube, The Carl Jackson Show on YouTube. We're also on Rumble if you prefer to go to Rumble. Again, social media, all things social media, The Carl Jackson Show. And please support our sponsors. Today's podcast is brought to you in part by Birch Gold. 2022 was the stock market's worst year since 2008. Inflation is hamstringing our economy and our savings. If you've been following the news, you know the Fed keeps raising interest rates because it's the only tool they have to keep inflation under control, and it's not working, which is why we have Bert on today. This administration is addicted to spending, and it's turning a blind eye on the ramifications. Do not wait until your savings lose more value than they have already. Hedge inflation by owning gold from Birch Gold Group. Birch Gold is the foremost authority on precious metals IRAs. That's right. They will help you convert your existing IRA or 401k into an IRA in gold. And here's the best part. It's tax sheltered. To learn more, text Carl to 989898 and receive a free info kit on diversifying into gold. With an A+ rating from the Better Business Bureau and thousands of satisfied customers, you can trust Birch Gold to protect your savings with gold. Again, text Carl to 989898 to claim your free info kit on gold. Again, text Carl to 989898. All right, stay tuned for some quick program messaging, and we'll be right back with Bert of Certified Financial Group. Okay. All right, Joe. So welcome to the Carl Jackson Show podcast here today, Joe. We really do appreciate you joining us pretty much last minute here. We appreciate you taking the time to come on to kind of answer our questions and clear up what's happening with this SVB collapse and why perhaps average Americans should be concerned, maybe not concerned. So thanks so much for coming on, Joe.
Sure. Good to be with you, Carl.
Thank you. All right, Joe. So here's the deal. First, let me ask you this question, because you hear it in the media already. Is this Trump's fault? He's not the president. Is this Trump's fault? Can we clear that up?
No, it's not Trump's fault at all. I mean, it's typical of the Biden administration. When things go sideways, they have to blame it on somebody else. No, it's not Trump's fault. In fact, Trump eased banking regulations for the smaller banks so they can compete more with the larger banks. And this was not in any way connected to anything that Trump has done.
Yeah, you know that's what's so frustrating about the left. They don't take accountability for the actions and or the damage that they're causing, and that's kind of the stuff. That's the stuff that I want to clear up today. Let me ask you this here, Joe. Should the average American be concerned about what's happening with SVB, and if so, why so?
Well, the average American is, their accounts are guaranteed up to $250,000, so that the average American probably doesn't have to worry about that. But if you have larger deposits, the government now is saying that they will cover all deposits, but they haven't said that explicitly. In fact, I heard this morning that they've implied that they will step in on an as-needed basis. So yesterday, when the president got on the air, he said, everybody's covered, anything, anywhere around the country. Well, when you read the fine print, they're saying they're going to do it on an as-needed basis and enforce some emergency measures. But generally, we're not going to have a run on the bank, contrary to what I think the media wants you to believe. It's clickbait. Average American doesn't have to worry about it. That's the good news.
Okay, yeah, I'm wondering if that, hearing these stories, for me, I'm like, okay, I'm not going to panic. I don't know where else I would take money that I put in the bank. Makes no sense to me. But I assume some people will hear stories like this. They would panic. They would, take their money out of the bank as quickly as possible and cause a run on the bank. That's exactly what happened with SVB. So I just wanted to make that clear for those of you that are in the listening audience. And by the way, Joe, if somebody wants to get a hold of you, let's go ahead and do this right away. Where can people go to find you? Because I'll say this: you guys know Birch Gold is a sponsor of this program, but even when it comes to investing in gold, I always recommend that you speak with a financial advisor before you make any decisions. Joe Bert is a great one. He's located in the Central Florida area, but obviously he handles accounts all over. So, Joe, where can people go to find you?
Well, the easiest thing to find out about me is just Google me, Joe Bert, B-E-R-T, one word, and you'll find out all about me and how to reach me. So just plug in Google Joe Bert and B-E-R-T, and that'll do it.
Man, Joe, that's when you know you made it big time. When all you have to say is Google my name. It's like, good. That's how you find me. Google my name. That's cool. All right. So let me ask you this. This DoddFrank Act, I want to just go back to this for just a second here. The DoddFrank Act, that was made law after the 2008 collapse, if you will, of the financial systems. But it seems like a lot of the regulations put in place only help the elite or the big banks, not necessarily the small banks. And am I wrong on that? Can you break that down a little bit?
Exactly. In fact, that's what President Trump tried to do. He tried to make it a little easier for the smaller community banks, regional banks, to compete with the big four. And but as we said just a few minutes ago, the president is blaming, what happened on Donald Trump. That had nothing to do with it. In fact, the irony of this is, Signature Bank in New York folded.
Right.
And you'll never guess who was on the board of Signature Bank.
Barney Frank.
That's right.
Good God, man. Oh, that guy, I couldn't stand him when he was in Congress.
What goes wrong comes wrong, Carl.
Still doing damage today. Okay, so Silicon Valley Bank. So you guys will hear me refer to it here as SVB for short. They had no chief risk officer for nearly a year, Joe. Right. April 2022 to January 23rd. Assets and liabilities mixed. It's like they had no clue what was going on. Is this normal for these banks like this that may take on high risk loans? Well, I don't understand this.
Not in a well-run institution, and that's what got them in trouble. What they were doing. Here's the problem that the banks have in general. You take your money to the bank. They don't stick it in a vault and that's it. They make money by taking your money and either lending it out for loans or investing it. And what they did is they bought a lot of long-term treasuries with long maturities to get a higher yield. That higher yield allowed them to pay a little bit more on savings. Because they were paying a little bit more on savings, they got more money. More money came in, they went out and bought more long-term treasuries. And then when the Fed started raising interest rates, the value of those treasuries declined.
I got you.
You got to remember that when interest rates go up, the value of bonds go down, even if they're guaranteed by the federal government, and you don't get your money back until you hold them to maturity. Well, unfortunately, the bank has to recognize the value of those investments on their balance sheet. And because their ratios were out of whack, they were going to be insolvent. And that's what happened.
Wow. Okay. I want to dive into that a little more in a short period of time here, because I want to make it so simple that like I said, the average guy understands this. Because if you talk about finances, a lot of people invest in their 401ks, perhaps, on their job or what have you, but they hear stories like this. And I don't think the average American completely understands just how dangerous it is to have these lending institutions that are just acting willy-nilly. And another thing I'm concerned of, Joe, is that there's this chasm that's developing in the United States of America. There's the people that support Democrats, in my opinion, and the people that do not. That's another concern that I have. And it seems to me, whether it's the justice system, whether it's the financial system, the people that support Democrats seem to get hooked up. I'm concerned that the people with the Silicon Valley Bank will get special treatment that you and I believe, Joe, would not get from the federal government, because I believe those people are donors to the Biden administration and the Democrat Party. What's your take on that?
Well, it's interesting. Silicon Valley Bank was in Silicon Valley, which is where the tech sector is, which, we all know that they are big Democrat donors, and they had more than $250,000 in the bank on deposit, and they were at risk of losing their capital. So I'm not sure that it's totally tied to it, but it sure smells a little bit
Right.
that they got the bailout. Now, yesterday, if you paid attention, I'm sure you did, the president said that the stockholders and the bondholders will not be bailed out. However, the depositors, who are primarily the startup companies in Silicon Valley, had billions of dollars invested in that bank in savings, and they were at risk, and the government stepped in. And I don't necessarily fault the government for doing this. I mean, however, what I do fault the government for, Carl, is the bank regulators. They need to keep a closer eye on what the hell is going on with these banks.
Right.
And we can't have this going on. And this is, somebody said this morning that this is we're seeing capitalism destroyed before our eyes when anytime something goes wrong, the government steps in to bail it out. What the government should have done, maybe I'm talking out of both sides of my mouth here, is just let this thing collapse.
Yeah.
Just let it collapse and let the chips fall where they may, and let's move on. But, when the government steps in and says, we're going to cover every single loan that ever goes, every single deposit that ever goes bad, we're walking away from capitalism, which isn't how this country was built.
Yeah, you know what, and let's dive into that. I mean, because that's essentially what happened in 2008. We propped up all of these banks; they got bigger. They're doing some of the same stupid stuff today that they did in the past. Instead of learning the lessons and putting things in place to make sure that depositors are okay. Within their banks. I know in UK, I was reading this morning that they put up a system in place that places personal responsibility on the top executives if they make bad decisions that leads to a failure of an institution. And I haven't had time to think through that. And I'm like, man, I mean, they're a little harsh there. But at the same token, it makes sense that you would make sure that the top executives and the people, the risk officers that are examining the assets and liabilities would have some culpability or would have some fire underneath their feet that says, you know what, I better not do anything stupid here. I'm not going to risk people's livelihoods.
Well, as we can see, and as you just said a few minutes ago, they didn't have a risk manager for several months. And how do you run an organization like that? That's the number one thing you want to look at in banking. So they were not watching the store, and that's exactly what happened. And it came back to bite them. You had a run on the bank, and their assets or their liabilities exceeded their assets, and they folded. And then, of course, Signature Bank had trouble because they're heavily involved in crypto, which is a whole other problem. Carl, I was reading something the other day, or in fact, not the other day, but this morning about this may be an opportunity now for the government to take even more control of our dollar.
Yeah, that's what's
moving toward a digital currency. And you've heard, and I'm sure you've talked about on previous shows, that this is where a lot of people want to go, so they have total control over where your dollars are and how you control your dollars, and that's the last thing we need in this country. But when there's a saying, never let a crisis go to waste, and this is a crisis, and who knows what's going to come out of it.
Yeah, that's one of my fears. Actually, I'm going to be having another guest on later this week to talk about the digital currency specifically, because that does concern me. I mean, obviously, that's what China has moved to. And I mean, they can shut you down anytime they want to. The elites and the politicians in DC have absolute and total control over where you spend your money, how you spend your money. And what concerns me about that, I won't go too deeply into that, is just how many people are so naive to it. I mean, we want utter convenience here in the United States, but we don't consider the long-term consequences of that. And it scares me, Joe, to be honest, of how the younger generations, simply think nothing of freedom. I mean, it terrifies me, and we're relying on the next generation to keep this puppy, this experiment called America going. And I know there's a lot of great people out there, Charlie Kirk, Turning Point USA, so on, et cetera. But man, it's scary. It's really scary to me. It concerns me. Let me get your comment on this. The Silicon Valley Bank CEO, a guy by the name of Gary Becker, sold $3.6 million worth of shares just 2 weeks before the crash. Joe, do you think this is a coincidence?
Well, it's obvious. It's obvious what happened. It's a matter of timing. Maybe he saw the writing on the wall. He's in the driver's seat. It's probably suspect. Now people are talking about there ought to be some clawback on some of that. And not only him, but their chief financial officer, chief marketing officer also did the same thing. within last few weeks. Who knows? I mean, it's very possible. The stock was doing well. They wanted to cash out, but then shortly thereafter, the bank collapses, but they got their money out.
Okay. All right. So it could be a bad thing, not necessarily a bad thing. We simply don't know.
It could be timing, and hopefully there'll be some investigation about this, because if they've taken advantage of the situation, not a good thing for anybody.
Okay, will you break this down for me? I was reading through an article today here, Joe, and it said the Federal Reserve, from the Daily Signal, the Federal Reserve should not allow banks to run big bond investment portfolios without requiring them to record profits and losses daily. Obviously, that's assets and liabilities. But will you kind of touched on that? Will you just circle back to that so that we have a little more clarification on that?
Sure. It's what we call mark to market. In other words, what's the value today? And as we said just a few minutes ago, the banks hold in this particular case, some long-term treasuries. So they were investing the money to get a higher rate of return. Typically, if you invest your money for a longer term, you get a better yield. And that's what they were doing. They were had all this money. They didn't know what to do with it. They couldn't lend it out fast enough. So what you need to do, you need to put it to work. And the safest place to put it to work is in government securities, because U.S. government securities is the safest investment in the world. However, to get your money back, you have to hold it until it matures. And if it doesn't mature for 10 years and the interest rates are going up, the value of that is going to go down.
Right. Okay.
Never going to go down. So what happened is the value of that portfolio decreased, and banks have to maintain a certain ratio of their assets to their liabilities. Well, all of a sudden, their assets are decreasing and their liabilities are here, and their assets are going down. That leads to insolvency, and that's exactly what happened. So they weren't managing their portfolios right.
Man, so this isn't something that
Carl. Wait, one more thing. The other thing too is this particular bank had a high concentration in Silicon Valley startups.
Right.
And so, if you're gonna, and this is where we look back to 2008, 2009, how many banks were doing the mortgages, heavily concentrated in mortgages, and when that house of cards fell apart, took down a lot of folks.
All right, let me just take a quick time to talk about another sponsor here. And again, I'm speaking to Joe Bert of the Certified Financial Group. Actually, you can find him online too. It's financialgroup.com, the website, right, Joe?
That's correct. Yep.
All right, so financialgroup.com, or just Google Joe Bert, B-E-R-T, and you will find him there. If you need somebody to talk to, a firm to talk to about your money, if you're a little panicked, if you want to know how to manage your money going through this man, I this presidency is a freaking crisis. So if you want to know how to survive for the next couple of years, go to financialgroup.com or Google Joe Bert and get some help. All right, guys, I want to talk to you about another patriot, another exceptional business, and that is mypillow.com. Mike Lindell, the founder of MyPillow, is putting out fabulous products. His latest is the MyPillow 2.0. Guys, I'm not blowing smoke up your butt. I have it. I love it. I did not think they could beat the original MyPillow. I didn't even want to say that on air, but they did. I love this. I love this new MyPillow 2.0. It has the same feeling as the original MyPillow, but it has this outer layer now that dissipates heat, so it's smoother and it's cooler when you sleep. I absolutely love it. All you have to do is go to mypillow.com, click on the radio listener square at the top of the page, and enter my name, CARL, at the top of the page. See, Joe, I guess I am becoming a little more popular, because now I could just mention my name like you.
There you go.
All right. So go to mypillow.com, mention my name and the promo code at the top of the page. Or if you prefer, give them a call, 800-858-0263. 800-858-0263. And right now there is a buy one, get one free on the MyPillow 2.0. So all you have to do is mention my name. You'll get the buy one, get one free. Make sure you take advantage of that offer. Also, if you want to just peruse the site, mypillow.com, there are deals up to 70% off if you mention my name, Carl. All right. So that's exclusively for my listeners, mypillow.com. Click on the radio listener square, enter my name, or give them a call, 800-858-0263. All right. Again, I'm speaking with Joe Bert of the Certified Financial Group. You can find him online, financialgroup.com, or Google his name, Joe Bert. He is well known in the Central Florida area in particular. He and his firm handle a buttload of money. So they've been doing a lot of people trust them, and they do a great job at managing that money. So the reason why I have him on today, obviously, is just all the ins and outs and the questions that you may not have heard answered. If you've watched television, if you've listened to radio, people can only take so much time to interview a guest. This is one of the reasons why I like long form interviews on podcasts, because when we have issues like this, we can have a guest on like Joe Bert that can just explain the ins and outs so that the average man gets it. Because that's my goal here. Really, I'm one of these people. I want to save the middle class in America. I believe the left is doing the best they can to absolutely destroy the middle class, where we just have a sector of elites, or the haves and the have-nots. And the middle class is the best stepping stone to become wealthy in America. I mean, you can start off with a job, not even making that much money. But if you don't get into crazy debt, if you learn to save your money and invest, you can become wealthy in America, regardless of your background. And I think the left is really trying to destroy that in America. So I want to make sure that that does not happen. So informing you is one of the ways in which you do that. Joe, this bank, and like all financial institutions should do, wink, wink, they were heavily invested in ESG, diversity, equity, and inclusion. They mentioned the bank, the critical risk management and their proxy. They had statements of ESG 40 times in their proxy. They also included environmental sustainability, climate change, external DEI initiatives, board diversity, their philanthropic strategy, and advocacy activities. If we see something like that in a bank's proxy, should we run?
Well, when you start running your company based on this ESG stuff, what you want to do is find the very best people, put them on your board. I don't care what their sexual preference is. I don't care what color they are. I don't care where they came from. If they're very good at what they do, that's who you want.
Right.
Forget this criteria that you need to have so many of this, so many of that, so many different colors, different races, different sexes. You want, as a fiduciary, you're responsible to your shareholders by finding the very best people. And we start going down that path, you're in big trouble. In fact, I don't know if you saw it, Carl. I think it was on Saturday's Wall Street Journal. They did a detailed analysis of companies that were in the S&P 500, how those that are espousing ESG and those that are running their companies, the way you and I would run it, they have outperformed the ESG companies by a large margin.
I didn't see that, but I'm happy to hear that.
Wall Street Journal. So, they allude to the fact that if you have ESG, you're going to be a better company, you're going to be more profitable, better for stockholders. Well, it doesn't appear to be that way.
Man, that is so, honestly, that is really good to hear. I did not know that. So I appreciate you sharing that. And that is very good news, because I think that's what a lot of these these guys are just lefties, commies. I mean, it's insane how they're using investors' money to change, to fundamentally transform this country. And I'm like, that's just a shame. So I'm really happy to hear that. So the bank, I want to go back to a couple of things here. The bank was holding risky bonds in its liquidity portfolio. You've explained that. The bank was also investing in client deposits in liquid bonds, but chose higher risk bonds that fluctuated significantly when interest rates rose and fell. You've basically covered that as well. The value of short-term, less risky bonds rise and fall less relative to fluctuating interest rates. Man, you've covered that as well. The bank invested its deposits in higher interest rates. They went for short-term instead of long-term. So all of this stuff you've mentioned, I had all of these questions, Joe, and you've essentially just answered every single one of them. What should the company have done differently?
Well, they should have managed their risk better. First of all, you need to diversify your loan portfolio. If you have a concentration in any particular industry and that industry has trouble, I don't care what it is, whether it's real estate, in this case, it's the tech sector, or there's pharmaceuticals, whatever, that has trouble, your loan portfolio is going to be in trouble. Secondly, you have to, look at what your what your demand deposits are, which is the money that people can get just by getting on your cell phone and wanting your money back. Those your demand deposits need to be balanced against your liabilities, and be sure that you maintain the liquidity. And if you in a rising interest rate environment like the Fed has been signaling now for over a year, they're going to raise interest rates. You need to look at what impact that has on your bond portfolio, because as we said, when interest rates go up, the value of your bonds go down, therefore your assets go down, and therefore you've got trouble. And that's what they should have done, and they didn't do it.
The person that's still listening to us here, Joe, and they're like, I just don't quite understand what they're saying. In layman's terms, what should the average person be looking for now, even when they go banking? Because I think that's becoming important. I'm really glad to hear you report the news that some of these firms that have went big time in this ESG direction are feeling the pain. But what should the average man or woman be looking for, not just in investing, but banking, so that their money is a little more secure?
Once again, your bank deposits are covered up to $250,000. That's the FDIC insurance. So the average man is going to be covered. Now, if you've got a small business and you've got millions of dollars, then you want to perhaps have some more diversification. And I hate to say this, Carl, but it's getting more and more that the big four banks is where people are going, simply because they're too big to fail. And we're going to see what happens with it when the government, if there's another fallout of another bank or two, what they're going to do in terms of stepping up and covering deposits. But as we said, I think we're destroying capitalism by having the government step in and doing all the stuff, and the government just wants to take control of our financial lives, and this gives them another opportunity to talk about it.
Man, that's a scary thought here, Joe, because I'm sitting here thinking one of the thoughts that came through my mind was, you know what, get into a smaller bank, a regional bank, a local bank of some sort. But it seems as though the government is intentionally disempowering those banks. But I still think that's the right move, if possible, as long as they're not, diving into this ESG crap. Do you agree or disagree?
Well, I agree. I mean, we use a local bank here, a community bank. Been with them a long time. Good, well-run bank. And credit unions are another alternative, for your savings and your cash needs. And you can't. The problem is a small guy doesn't get much attention at the big four. The Bank of America, Wells Fargo. You're not going to. It's difficult to deal with those banks. In fact, they don't even want you anymore.
Yeah, it's amazing. It's amazing where we're headed, folks. Again, I just wanted to bring you some more information when it came to SVB. I wanted you to be aware of what's happening out there. Again, you heard Joe Bert say it. Make sure that your portfolio is diversified, even when it comes to gold. I know Bert's Gold Group, they are a sponsor. Obviously, I do recommend them, but you want to speak to a financial advisor because you want to understand how much of that should be a part of your portfolio. Obviously, it should not be a huge part of your portfolio, but you want to make sure that you are diversified. Because I think the left is coming out to get your money. I think they're coming out to pick your pocket, and not just in taxes. If you leave it up to these guys in Washington, D.C., and they're already doing it, you can save, you can invest, you can scrape, your entire life. You can build up a real estate portfolio. You can build up wealth, and they'll try to tax you when you're dead. It drives me absolutely nuts here, Joe. And it drives me nuts that more people, I think we should be talking about this more frequently. Because people need to understand how important their money is and the power they hold by keeping more of their money.
Yeah. Unfortunately, the good news is, Carl, we live in the best country in the world. People are risking their lives to come here. However, if people don't understand how the government works, you don't understand what you're voting for, you're voting with your heart instead of your brain, we end up with the mess we have in Washington. And that's what happened in the last election. It gets back to our educational system. I'm sure you've talked about this on previous shows. Our educational system has failed us, not only teaching us basic civics, but teaching us basic things about saving and investing. We're raising generation upon financial illiterates. People are doing the wrong things at the wrong time. Wake up, in retirement and find out that they're broke simply because they made a bunch of mistakes while they were growing up, or nobody ever taught them about saving and investing. And time is a great asset. Unfortunately, most people don't wake up until they're in their 50s and 60s. Some people never wake up.
That's a great line. Time is a great asset. That is a great line. Last thing here, Joe. Joe Biden, the genius in the White House, said that basically taxpayers would not be bailing out the stakeholders, shareholders, depositors at SVB. Ultimately, I believe that to be a lie. Is there an element of truth to that statement?
Well, they're saying that it's going to be covered by FDIC Insurance. Now, what is FDIC Insurance? That's the Federal Deposit Insurance Corporation, which every bank pays into to be in the game, and it's a function of your deposits. It's, we have the same thing in the state of Florida. The state of Florida has what's called the Life Guarantee Act, that all insurance companies pay in a certain part of their premium to the state of Florida. This way, heaven forbid, an insurance company goes out of business, there's money there to bail out that insurance company. Same thing in the banking system. So what they're going to do is they're going to assess the banks a little bit more premium, if you will, to cover these deposits. Now, what you're doing is you're raising the cost of the bank to do business. And there's no free lunch. I mean, it is indirect, but what will happen is probably banking fees will go up. The cost of your credit card, the cost of your checking account, the cost of all the things that the banks do for you will probably increase because that cost has to be passed on somewhere. So you're not going to see, somebody coming out, the government is going to jump in and bail out X billions of dollars. Are going to come from the FDIC, but indirectly it's going to come from you and me.
Good stuff. All right. Joe Bert of the Certified Financial Group. Go to financialgroup.com or Google his name, Joe Bert. If you need some advice, this is a guy that you want to go to. I hope that we've been able to answer some of your questions and clear up what's happening with SVB. Again, if you have up to $250,000 in the bank, you are secure, you are insured. However, if the government goes around and bails out a bunch of millionaires 100 times over and billionaires, I'm not sure how much money will be insured by the FDIC, but we'll find out. So hopefully they don't do that. But Joe Bert, I definitely appreciate your time clearing some of this stuff, taking the time to clear some of this stuff up for you. Appreciate you, man. All right, so just real quick before we let go of Joe Bert here, Joe, your firm had some great news recently. Why don't you tell us about it before we get out of here?
Yeah, I'm happy to, Carl. We were chosen by CNBC as one of the top 100 financial firms in the country out of nearly 40,000 firms across the country. And there are only 5 in the state of Florida, and we were the only one in Central Florida. So we're very, very proud of that.
All right, man. So that's good news. So if you wanted someone you could trust to talk to about your money, to talk to you about saving and investing, and just having a strategy going forward into retirement, Joe Bert of the Certified Financial Planners, financialgroup.com. Make sure you get a hold of him. Joe, again, we appreciate your time.
My pleasure, Carl. Take care.
All right. All right, guys, I appreciate you tuning in to this edition of the Carl Jackson Show podcast. Again, please subscribe to our podcast wherever you go to get your podcast. Also, subscribe to our YouTube channel, The Carl Jackson Show on youtube.com. We're also on Rumble as well. We would appreciate you finding us there. When you do that, just being honest, guys, it helps us move up the charts. More people can find us as we move up the charts. We're in this fight to restore Judeo-Christian values in America. We're in this fight to restore or to rebuild the middle class in America that I believe the left is trying to wipe out. If you want to come on board and help us do that, one of the ways in which you can do that is by sharing this show. Making sure you subscribe to it. It really does help. And please support our sponsors. This show was brought to you by MyPillow.com. Again, MyPillow.com. They've got the new MyPillow 2.0, the same patented feel on the inside, but they've got this new outer layer that dissipates heat. That it makes it cooler when you sleep. It's softer. It's smoother. You will absolutely love it. All you have to do is go to mypillow.com, click on the radio listener square at the top of the page, or give them a call, 800-858-0263, 800-858-0263. And for those of you that want to make sure that you have something tangible that you're investing in, guys, be on the safe side. Your portfolio should be diversified. Invest in some gold. I'm not saying buy, tons of gold where half your portfolio is gold. Don't do anything crazy like that. Make sure your portfolio is diversified so you're protected, but make sure you're invested in something that's tangible. You really want to make sure that you do that. So Birch Gold is the foremost authority on precious metals IRAs. They will help you convert an existing IRA or 401k into an IRA in gold. And here's the best part. It is tax sheltered. So to learn more, all you have to do is text my name, Carl, to 989898. That's 989898, and you'll receive a free info kit on diversifying into gold. That's the Birch Gold Group. Guys, we appreciate you tuning in to this edition of the Carl Jackson Show podcast. And until next time, do not grow weary doing good. God bless you.